Hey everyone, welcome to this week's episode of the Raising Millionaires podcast. I am your co-host Roger Bryan,
And I am Richard Lorenzen.
and I am joining you today from sunny Myrtle Beach, where I have managed to get sunburn already.
Nice. Well, I am joining from rainy Midtown Manhattan.
Sounds like Ohio, been raining nonstop.
Yep.
So crazy on the flight down. This is I think only the third time this has happened to me. We were on descent, ready to land in Myrtle Beach, and they closed the airport. So we had to take back off because of a storm. We ended up landing in Roanoke, Virginia, 5 hours away via driving. But luckily we were there for a little bit. They refueled, we took back off, and we made it in.
Okay.
Doesn't happen very. Have you ever been redirected like that?
Yeah.
Yeah.
It's
I used to have it a
all
lot when I went to Chicago.
Yep. Yeah, I've been redirected so many times. Like, airlines are terrible. So,
Yeah. It keeps
but
zooming in and out on me in the color. My computer doesn't know what to do. Oh well.
it's because the sky is just so blue. that-
Hold on. No, that's not better. All right, just go with it. Um,
so,
I think today you mentioned talking a little bit about that article that you sent me on the S&P 500.
yep.
Can't help but talk about Iran and oil
Yep.
prices.
Yep.
And then I'd love to talk about the Made in America Trump cell phone from China.
Okay, let's do it. There's a lot to unpack. We can start with the markets are down a little bit right now. They're down about 1% across the board. I was looking for a price on oil, but oil is up about 5% today. No surprise. We'll talk about that in a minute. It's been a volatile week so far, starting with over the weekend. Israel launching a series of new airstrikes against Iran. Iran retaliating, and it's continued to escalate over the past couple of days, with markets kind of worrying that it could lead to a wider scope conflict in the region. So Roger, thoughts on some of the events that we're seeing in the
You know
Middle
what's
East?
been interesting on this one? It's something that I don't see all the time, but I've seen a lot of influencers that normally don't talk about like geopolitics posting stuff about this conflict and how it's going to escalate and what it means for a larger scale war. And I kind of took a step back when I started seeing that. I'm like, well, what am I missing here that is getting these guys to talk about it like this? I think on one front, Israel, man, their spy network is good,
Yeah.
right? They have been able to pinpoint, I think, 5 of the top 20 people in the Supreme Leaders organization to take out all in like 24 hours. They did
Yep.
the same thing with Hezbollah. What's the other group that does the pirating stuff? Oh, brain fart.
We're talking about Hamas, or are we talking about?
What's the one that does all the pirating? There's Hamas, Hezbollah, this,
I don't know.
damn it. I have to look it up now or it's going to bother me.
Okay. Yeah. Well, is no doubt, Israel's spy capabilities, whatever you want to call them, are superior to Iran. So is their.
The Houthis.
Oh, okay, the Houthis. Okay. So, yeah, I mean, incredible espionage network. They also have air superiority against Iran. No question about that. Which is, leading to, obviously they've launched all these airstrikes against Iran over the past couple of days. Iran is retaliating, but has significantly less capability or options for doing so. And so in the markets anyway, you're seeing more of a concern of this kind of overflowing into a wider scale conflict. But you were talking about influencers online. who I guess, there's a lot of doomsayers is kind of the point you were making
No,
about
see now if it was the doomsayer saying it, it wouldn't be such a big deal. But these were like your run-of-the-mill people that don't usually
like
talk about any of this
mainstream.
stuff, so it caught my attention.
Hmm.
I can't help but think too that oil was pressing on $60 a barrel when in the U.S. a lot of production has a break-even point around like 62.50, 65. So you got to do something to push the price of oil back up, right?
Oil is at $75 right now,
Yep.
and
Um,
so yeah. But gold, interestingly, is not really surging, and it's not at all. I mean, it's down a little bit right now. It's at $3,400 roughly. Um, if we were seeing a situation where the market really thought we were heading towards like a World War III scenario, I think you would see gold going up much higher. Um,
well,
but I don't know if that's
has
an
gold
indicator.
already baked in a world war from everything that's gone on since the earlier part of this year? Like you talk
Fair.
about the S&P going sideways for the rest of the year, and that would be a relief, right? Considering like how in the world has it been so stable given everything that we've been through already this year?
Yeah. You could also argue that for the S&P, for all of the prognosticators out there predicting recessions and crashes, the economic data is held up relatively well. Like talking about domestically here in the U.S., job market has held up better than expected, more or less. I would even argue that GDP is more or less stronger than maybe some would have expected it to
Didn't
be
we get low consumer sentiment today?
today. I don't know.
What is
The
it,
low, the
Tuesday?
last number came out higher than expected.
Something
It
came in low. Retail
producer.
sales fell by 0.9% in May, worse than expected.
Okay.
And home builder sentiment nears pandemic low amid economic uncertainty.
So there was an article that I sent you this morning on CNBC. Is an interview with Leon Cooperman, the billionaire money manager, and he made a prediction about the S&P 500 essentially going nowhere for presumably for at least the rest of this year, um, which is which is still diverges from the consensus on the street, which is that we'll probably see something like a 4 to 5% year on the S&P, still much lower than it has been the last few years, but nonetheless a positive year. Um, what do you think about that?
I think everybody should ditch the S&P and buy CoreWeave. I mean, it can only go up, right? There's nothing bringing it back down. Or buy
Were you in?
Circle and
Was
just
that
let the money
that
flow.
was that the one you were in a short position on?
I did short it at a NVIDIA earnings last round. I mean, a very small play, and it didn't work out. But I think even you said you talked to some people on the street and that it's due, just don't know when.
Yeah.
Um,
Well, there's a
we
lot
had
of
to,
people saying that we're at the beginning of another leg up in the AI trade overall.
did you see? And I don't want to get too side off the S&P. I want to come back to that. But OpenAI got its first $200 million government contract.
Oh, I didn't see that.
So yeah, I mean, the use case for AI is expanding rapidly as the consumption side of model usage continues to decrease. As I'm doing my work on building multi-layered agents, and I'm reading articles. You can do 4 times what you could a year ago at the same cost.
Yeah.
So if that's going to what did the article talk about? There used to be this intelligence scaling formula, which has just gone completely out of the window, where like human intelligence doubles every 14 years based on technology, where they had an inverse comparison to AI driven consumption. As it becomes more intelligent, it becomes more scalable in of itself, which I thought was pretty cool. Um,
So that's a 1 year, $200 million contract from DoD for
yep.
OpenAI.
I just think it's interesting to start seeing that playing such a big role. You think any other administration, you probably wouldn't be seeing that. I don't know if that's a good thing or a scary thing.
Yep. You could also argue that it's probably inevitable.
Oh yeah.
No matter who the administration is, it happens to be this one. But um, I think 5 years from now, when you look at the application of AI in defense, um, so I talked to some clients who manage money in the tech sector, and they're most excited right now about AI military tech names. Um, Palantir, for example.
Yeah.
And obviously, with everything now also taking place over the last couple of days in the Middle East, it becomes even more relevant. But there's going to be a lot of adoption, I think, over the next couple of years from the
No,
federal.
there will be. It was interesting. I was scrolling around on LinkedIn, and there's a guy that I know from Cleveland. His name's Lane. I'm not going to say his last name. Who I worked with on some blockchain projects. And I looked at his profile, and he's been doing a DoD AI deal with the FBI for the last 18 months. And super smart guy, super well connected. But I was like, what in the world is he working on? Where did that come from?
Hmm.
So yeah, I see a lot of investment and a lot of focus in on that, especially when you have an administration that is definitely so focused in on the competitive nature of Chinese advancements in AI and military tech.
So, but that's also why, bringing it all back to the S&P, when we talk about like S&P performance this year, and we look at the percentage of the S&P that's made up by tech companies, especially AI, uh, it I still think that there's a bull market that's another leg of a bull market that's happening in tech right now, that will probably push the S&P at least a little bit higher. Um, I can't speak to the other sectors,
So you
but
know what would be interesting on this? So you used to have Fang, then you had the Magnificent Seven,
yep.
and as AI tech becomes a heavy player, are you going to see any of those names rotate out of favor in lieu of, right? If OpenAI went public today, it would probably be what, $200 billion, $250 billion company, if not more.
Yep.
Um,
Hmm.
I'm just wondering if there's a rotation in that, even in the S&P, where you look at what companies are 5 years away from being the next part of the S&P, the next part of whatever the
Yep.
Magnificent 74, or whatever the hell it's going to be,
Oh yeah.
like a Plantair or a OpenAI, or I'm still waiting. Like that concept of the first billion-dollar one-person company just
Yep.
fascinates me. Just absolutely fascinates me. And when I look at how AI agents can be built to be deployed in, I don't think they can replace humans. Here's what I do think though, right? If you start a new base and you build only with agents, they may have limited capabilities over a human, but if you put enough of them together, could you build 100 agents that reach the capacity of 5 or 10 humans to reach the same level of intelligence for implementation? I don't know.
Yep. Well, it's interesting to think about what the future of the S&P might look like in, let's say, 5 years, uh, because of some of these new tech companies that are going to be, eventually, presumably going public. But it also speaks to how right now in the market, there's been a lot of articles about this over the last few days. Um, there's a lot more interest from Wall Street in private uh, companies and alts or alternative assets right now, that are not necessarily super accessible for the average retail investor. But there's a lot of action going that way right now,
Yep.
and part of it is to get access, to get exposure to some of the innovations we're seeing in AI. Um, but there's definitely a shift there. Like we see it with our own clients. There's a lot of interest in alts. There's a lot of interest in private markets, private credit. Um, so
There
that
was
just
also a great article published, I probably read this 2 or 3 weeks ago, where there is the lack of incentive to a lot of private funds to exit deals. And I was trying to read the complexities of the commission structures for both initial funding and carrying of the investment that outweighs like, so a lot of the funds might hold a very minority stake in the projects that they brought to market, but all of the investment that's made into the fund is carrying like a 2 and 20, and that an exit into the public markets might not give a lot of the 20 credibility, but the 2% carry it on a multi-billion-dollar fund on the valuations of some of these companies. The math on it was a little head-scratching because I've always looked at you want to exit all of these projects, hopefully at a 10x and different things like that. But all of the different ramifications of exits, from taxes to carrying costs to brokerage costs, it was kind of interesting why there's so many private unicorns now that aren't being brought to public markets. And it's almost that you have to, like, being a unicorn's not enough anymore, right? You've got to be like a hyper unicorn, able to exit at $50 to $100 billion in order to get the windfall for the investors that they want.
Yep. Yeah, the private market cap table or model, whatever you want to call it, I think is, it's becoming more popular. And at the same time, technology and the internet has also helped to democratize private markets for a lot of smaller investors.
Yep, there's a huge middle market that didn't exist 10 years ago.
Exactly. And so it's become a much more liquid market, a much more accessible market. And so you have private investors, retail investors, as well as institutional ones alike, that now have all these other options available to them besides just buying the S&P 500, which is super interesting because there are all kinds of alts out there that people are in. And then obviously private companies you can get in, whether it's like a platform like EquityZen.
They take 5 to 10% of every transaction. They will let the middle market float a company for the rest of eternity with that kind of brokerage margin on it.
Yeah, it's interesting stuff. Still, it still feels very illiquid for me. It really depends on what your investment goals are.
It's interesting while you're talking about this, and I think about some of the predictive modeling that we're trying to build around our wealth plan tool,
which is pretty much entirely based on public equity investments or real estate.
It does. It has to be public, but it's also subjective to published strategy, right? Unless you build your own strategy, right? I don't know. If we go and ask, like, what are the 5 companies that exist today that are most likely to enter the S&P in the next 5 years, and then you ask it based on historical trends, what happens to a company when the announcement's made, and then in the next 12 to 24 months after that, it might output some interesting ideas that we're not thinking about.
It'd be interesting.
All of this, right? Think of the research that you would need to do that on your own.
It would be interesting to see what it says.
Okay, let's find out.
Some of those companies are private today. Some of them are already public, but not in the S&P. Some of them don't exist, though, which is the crazy part.
That's the big thing, right? Yep, some of them don't exist.
Even in a window of time as little as 5 years, because of just the way that companies scale today, some of those companies don't exist yet that will be in the S&P 5 years from now.
Hold on, I've got to do this. Historically happens in I wonder what's going to say here. And this is just a quick prompt so people aren't sitting here watching me type the whole time.
Yeah, so we're looking at ChatGPT's prediction for future companies to be added to the S&P 500.
So funny. These are not what I would have thought. Trade Desk, SoFi, Plantair,
See that?
And Robinhood.
Well, these feel like safe picks to me. Like,
yeah.
These aren't like emerging tech companies. I could see SoFi. I could see Robinhood.
It's interesting though. I think that it's being very conservative. It's getting
Yeah.
post-inclusion outlook, fading momentum, historical effects, and short-term price jump. But it's only saying that it's going to have like an 8 to 12% effect on the stock prices. Most of these companies, have that sometimes in a day, right? So I think this is just too conservative. Okay,
Yeah.
it's always fun to try.
There are companies that don't exist yet today that may be in contention for the S&P 500 5 years from now, particularly within AI, quantum computing. But
Back onto the S&P side of things, 4 to 5%. You have to look at right.
well, let's back up for 1 second. So, where do you think the S&P? What were your targets for this year with managing your own portfolio for the S&P? What were your
Dude,
expectations?
and I hate to say Jude, but prior to after the initial onset of a tariffs, I was looking at negative 4% for the year.
Hmm.
And I'll be
I wasn't
honest,
sure.
in the article that you sent me, I actually liked what he said. Is like, you're going to do better this year looking at individual stocks, like a nod to Warren Buffett on value investing, right? Chasing these tech companies can be painful.
Yep.
It can also be very rewarding, don't get me wrong, but there's a lot of value companies in there. CNBC 2 weeks ago, they were looking to see if Apple now qualified as a value investment, right? Most people look at like if you get a 17 times earnings ratio, you can call it a value company up to about 21%. And Apple was pushing like 26%, which is like at a super low, except for like the COVID time frame. And it made me scratch my head, like Apple is a value company, right? But huge cash flows, steady
Yes.
product market. They of course have tariff problems though too. Who knows? Maybe they're going to make the American-made Chinese cell phone. I don't know.
But it's also just the cycle of maturity that companies go through
Yep.
from emerging. You know you're getting old when some
I
of the
was just thinking the
companies
same thing.
like these were companies back in the day that were emerging, high growth, speculative, and now they're value plays. So that's when you know.
So I told you at the beginning of the call, wealthplan.ai fell through. What do you think about wealthplans, plural.ai?
I think that's fine. Well, wealthplan.ai, is there something on that site right now, or is it just a part
No,
of
I
it?
mean the domain was available for purchase. I
Because if
had this happen to
there's something
me
out
where I
there.
had a domain on the aftermarket and I
Okay.
sold it and it didn't come off the listing and then somebody else bought it and then their order gets canceled because it's already been sold. It just sucks when it happens to you.
Yep. Well, the only reason I ask is because if there's already something on that site that's similar, like from an SEO standpoint, it wouldn't make sense. But I think wealthplans.ai is still almost as effective as wealth plan. Go and buy that domain name now if you can, because we just said that.
Yeah, you know what's crazy? They they are making a fortune. Do you know it's $150 a year to register an AI domain, and it's a minimum 2 years to do it?
Wow. So and for context for people, it's like $13 to get a .com, right?
Yep. It's actually gone up to 17, but still.
Still, yeah. Interesting. Interesting.
And
Okay.
every
Well,
freaking AI domain is bought.
hmm. Hmm.
I will say this: I just bought this for $50 plus $300 in registration fees, which is a fraction of what I paid for wealthplan.ai. So,
Yep.
and I actually am buying it right now because, of course, if we publish this and I hadn't bought it, I'd be screwed.
Yep. So wealthplans.ai, that's going to be the domain name. We already talked about last week. I tried out the, I guess, early iteration of it. Was impressed. What's the roadmap look like to launch that?
So it's interesting. So, okay, yeah, it's yours. Woohoo! This can be simple. It can also get super complex. I'm also finding that it's not crazy expensive to develop in this space, which was actually kind of surprising. You figure I've worked on software platforms where we've spent well into the 7 figures just on base tech. And
Yeah.
here, taking prompts, multi-layering them into agents, connecting all of the different API infrastructure, and using either low code or no code tech, you're looking at like $5,000 for the front end and like $2,000 for the back end, which is crazy inexpensive relative to other software builds. Now, this is still not hyperscale capable, but this is using a lot of low code, no code stuff. I was just surprised. I have the basic prompts for the family and the child side. I think the big thing that I'm looking at right now is getting everything connected, fluid, guardrails, and then also filtering mechanisms, right? If you put out a tool that can generate a free wealth plan for people as a lead gen, and you get 100,000 people to run it in a day by accident, right?
Yep.
You better hope you have a really good credit card on file. So now I'm trying to think through the funnel to provide both speed, efficiency, and filtering to make sure that I'm not losing my tail in all of this.
Right.
It's been interesting though. There's so much good training out there on all of these tools. A lot of it still does flow into the Python world, but Python's pretty easy to understand in the low-code, no-code world. So I just need to get a product to market, and I think now with this domain done, I've been waiting on the other domain. I bought it 7 days ago. I've got everything ready. I just want to deploy it, put up a couple buttons and a couple forms, and start sending it out to people to get 100 beta users, and then go from there. I don't know, what are your thoughts on this? Like, is this an all-in project, or is this like a test the waters type thing?
Well, we haven't talked about what the pricing model is.
Yeah, so what I have seen is that for like the first 100 users, you do the report, you do a human plus AI review of it to fix any problems, bugs, improvements, ideas. And at the end of that, for the first 100 users, you offer them like a $2,500 lifetime on it, with maybe like a 247 annual upgrade to the latest models with extra tokens for reports. And that'll come with monthly reminders, quarterly notification or quarterly statements, and an annual review. And then use that to try to build out the platform that automates a lot of this. But the human plus AI role for the first 100 users is really about like, what aren't you thinking about? Like, what am I missing? What are other people doing? What are other wealth strategies that aren't integrated so that we can build it into the mechanism?
I think there's a big target market for this, especially if you start with, I feel like the early adopters are going to be like the buyer community.
Yep.
And all the personal finance subreddits that are out there. I feel like Reddit would be a great channel to promote this.
I think so too. Reddit is a nightmare to navigate. All those subreddits, like I went into a domain one and I spelled a word wrong and my account got banned. It's just crazy how strict they've become. I will give Reddit credit though. Nobody else is being as strict as them, and their stock price is up. I don't know if we're at the 125 range, so that would be what, 5x in the last year?
Yeah. Well, I think their content moderation is pretty high quality. Like I go to Reddit.
Like it's extreme high quality.
I go to Reddit.
Actually, let me just say extreme period.
I don't go to Instagram or TikTok to learn things, but I go to Reddit.
It's a good point.
So, yeah, I think there's a big market. I don't know if it's an all-in project yet.
I think the speed at which you get the first 100 users might dictate a lot.
Yeah.
Now that I have a domain, I can get a website set up tonight, put the first 4 buttons on there, add a intro form. I've already got the full forms and the full prompt engines ready, so get the first couple hundred reports out.
it's also something that I could see another like financial services or financial tech, like fintech personal finance company buying as a bolt-on. And
That's
so
the goal, right?
that, yeah, like that could be, it might be that, like that could be an exit strategy as well.
I think that no, I 100% think that is an exit strategy. It's interesting to keep costs as low as possible to build up a huge user base to accomplish that goal. Problem is then you got to raise money to support the API credits.
If you can get a couple of financial influencers across like Instagram and TikTok, plus figure out a strategy for getting into the subreddits, I feel like that would be, that's phase one of the marketing strategy. Plus, you need some PR.
Plus what? Oh yeah, plus you need some PR.
Yeah.
Of course, you always need PR. Well, to be honest, I've always come to you for PR at the earliest stages of every project, right?
Yep.
If I'm launching a new algorithmic trading platform, you got me in NASDAQ before the rest of the world knows it exists. I publish a new book, you got me on the New York Stock Exchange floor before the rest of the world knows the book exists. That's how you go to market.
Yep.
One of my favorites is still the New York Stock Exchange one. I still like looking at that interview.
I was just there this morning.
Where's my invite?
Come on, anytime you want to come down, let me know. I'm there like 2-3 times a week. So
Well, I will. I'll take this for this week.
yeah, that's definitely nicer.
The only problem is we've been red flagged the entire time we've been here.
Mm.
The currents are crazy.
It's been like that the last few times that I've gone down to the Caribbean too, like over the last year or two. It's always red flag every time we're there.
We've been coming to the same spot for I think 12 years now, and I don't know. The waves have been this big before, but there's this weird sandbar thing happening, right? Where you've got the beach, then you've got like a 3-foot drop off, which makes it dangerous for the kids, and it goes about 20 feet, and then you hit sandbar and you're back up to knee level again, and the waves are cresting over that, then cresting again. The poor kids can't go in.
Mm.
Oh well, I'm complaining while I'm sitting here at the beach. Let's stop doing that.
It's tough down there in Myrtle Beach.
Hmm?
It's tough down there in Myrtle Beach.
I know, tough life.
Okay, so we've got 5 minutes before my next meeting.
Circling out the S&P, thinking about it from an algorithmic perspective or an AI perspective when creating wealth plans, I would have to look now and ask, are we in one of those forecasting cycles where you have to look at a down market, right? If you're forecasting 8 to 10% annual growth rates, but we're possibly going to be into a 4 to 5%, right? 4%, treasuries start to make more sense. Do you have to look at being a little bit more diversified? Or are you still just all in on the S&P and you're buying it at all-time highs, aren't we?
I get that, but I also think it really depends on your investment time horizon, because if your horizon's like 2 years, yeah, I would buy a treasury at 4% instead of saying, maybe I'll get 4% in the S&P, maybe I'll get a little more, maybe I'll get a lot less.
We don't have a time horizon engine in there. I don't know if it's self-modulating that.
Yeah, that's key, because like if my time horizon is like I'm investing for retirement and it's 20 years away or 10 years away, I'm still forecasting an average annual return on the S&P of like 8 to 9%. That doesn't mean it's going to be 8 to 9% every year. Some years it might be down 5%. Some years, like this past year, it might be up over 20, right? But if your time horizon's long and you're moving things around, like going into treasuries or getting into this or that to try to optimize your year-to-year return, you also risk missing out or not getting in time for those big bull runs that kind of come out of nowhere. Just like after Liberation Day in April, when the market tanked and a lot of people were moving to safer assets, the rebound happened so quickly that so many people missed out.
Yep.
And so there's that opportunity cost as well of moving into like a treasury bill or something like that. But it really depends on your time horizon. 2 years, I probably, if I had a portfolio that I was looking at like this is a 2-year thing, I would think about buying treasuries. Why not? It's risk-free, 4 to 5%. But over 10 years, like I can't see that. Even if the market's down 5% this year, over 10 years, like you're still going to come out much further ahead than if you potentially miss a rebound because you have to move back and forth between treasuries and equities. But
I agree with all of that. I think too, it's important that we make sure, especially as we're talking to this audience, that right, all of these tools that we're talking about, I think a big part of them still are lead gen for the overall real estate fund, and we've just been looking for that tip of the spear style strategy.
oh yeah, definitely.
Any final thoughts for today?
Well, let's see. Markets are. Wait a minute. No, I'm looking at oil. Oil is still up. I looked at oil and I thought the market was up. Markets are still down about 1%. Yeah, I mean it's going to be an interesting. There's going to be more volatility this week because there's a lot going
Okay,
on.
wait. European stocks fall as Israel-Iran conflict continues. Tel Aviv stocks hit record high. It's like backwards world. Let's go to war so our stock market can hit all-time highs.
There you go. Let's end on that.
Let's end on that. Welcome to backwards world, everybody. Have a great day, and we'll see you next week.
All right.